Okay. So let me share my screen. Um, Lots of stuff going on today. So I just want to go over the calls for the next few weeks. The big news is I just got accepted as an educator on GFU. So yay, me. I'll be starting, my first one will be on January 2nd. So that'll be on the GFU Live platform. My times will be Sundays at 8 p.m. and then Tuesday and Thursday at 8 a.m. That's Mountain Time, Mountain Standard Time. So I'm going through the onboarding now and the training on the system and everything. So it does take a couple of weeks to get up to date on that. And so I'm excited about that. And we will have a call on this Zoom, obviously today. And then I'm going to be doing a call on Monday, the 23rd at 8 a.m. We won't do Wednesday next week because it's Christmas Day. Jim won't be able to join us on Monday, but Jim and I will both be doing the Friday one at 8 a.m., same place on the Zoom. And then Monday, the 30th of December, we'll do another Zoom here at 8 a.m. And then obviously the Wednesday is the New Year's Day. And then the 2nd, which is a Thursday, I'll be starting on GFU Live. So yeah, from January going forward, we'll be on the GFU Live schedule, Sunday 8 p.m., Tuesday and Thursday 8 a.m. So that's that big announcement there. Let us go through here. There's the disclaimer, obviously, when we talk about anything on the charts, it's for educational, informational purposes only. Neither myself, Jim, nor GFU are licensed stockbrokers, financial advisors, or investment professionals. So do your own diligence before entering or exiting any trade. Contact any professionals that you feel that you need to contact. It's not a solicitation to invest or financial or investment advice, and always do your own research. It does involve risk and possible losses, so make sure you're up to date in your knowledge, and that's what we're trying to provide here is knowledge. So we'll go straight into it. We had lots of red folder news. I'm just going to do an overview because there were lots of things happening, and then I'll quickly touch on gold, and then we'll hand it over to Jim for indices to show you what's going on there. But as always, check your economic calendar, whichever one you use. You know which ones I use and which ones Jim uses, but use whichever one you prefer. The PCE inflation news is something that the Fed looks at very, very closely. So, we did have a spike up right at 7:30 Mountain Time, even though this came out at 6:30. We'll show you what happened on the charts a bit later. But just realize, when we're on the charts, that's technical analysis, and this is more economic analysis, what's going on in the market. You don't have to be an expert in the market and know everything. But nonetheless, it does help to keep your ear to the ground on what's going on around you that could affect the market and which direction it's heading off into, because obviously that's how we make our money. There's a government shutdown that's still not resolved. If it's not resolved today, the government is going to get shut down. It's happened. We've been in this position many, many times. There always seems to be a last gasp effort to keep it running. But just with the political climate at the moment, the Republicans do control the House, but they did reject President-elect Trump's plan. So not really sure what's going on there. So, the plan didn't get anywhere near a majority. So we're still in suspense there. Go online and read more about the details there to see what that might happen. The volatility index, as you know, that's on your chart as the VIX. We had a steep sell-off on Wednesday. after the Federal Reserve interest rate decision. And what that did is it caused a sudden spike in the fear gauge. And anytime that gauge is above 20, which happened right here, we're in a highly volatile state. And to give you this is a good representation because this is where it usually is, all the way down here. This is on the 30-minute chart. So that's kind of where it usually is. And then right here, you know, hi Cinder, if you can mute yourself out, please. The volatility index had jumped above 20 right here and soared right here, obviously. And then, you know, we've been well up there. So that's something that, you know, the markets look at quite a lot. Today, you know, that we have these options expiring the third Friday of every month. It actually expires on the Saturday, but obviously there's no trading on Saturday. So everyone is, you know, getting in and out their positions on the Friday. It's a quarterly event, does happen on the third Friday. This one is the biggest ever. And depending on which article you're reading or which source you're reading, it's somewhere between $6.6 trillion and $7.7 trillion. So that is going to cause volatility in the market. And obviously we're expecting it, you know, at market open. We'll show you that in a minute because most of them are tied to the S&P 500. So that's why we're seeing that. And that's the end for today. It was just a quick overview of what happens in the market that you should be aware of. So first of all is that economic calendar for sure, because that is what you want to be looking at every morning before you trade. Okay. So let me just get over to GFU and show you basically what's happening there as well quickly before I hand it over to Jim. We probably might not go the whole hour today, but let's see what we do with this. Is there any questions on that before we go any further? Let's just look in the chat and see. Thank you, Francisco. Thank you, Jennifer. Thanks, Shani. Thank you, Maria. Cinder, thank you. Yeah, I'm very excited about becoming an educator. It's really, I really enjoy this process. I really enjoy passing on my wisdom, as does Jim. We love helping people get a grasp of this trading thing. We believe it wholeheartedly. We believe that if you get the skills down to do this, you can do this professionally. You can do this as a full-time income. It can retire you from your job, as it has with Jim. You can do it full-time, and full-time, you know, to me is, you know, 2 or 3 hours a day. That's full-time. So, you know, that's where we all want to get you to that position. And the charts are simple, but they're not easy. And we've covered that as well with consistency and discipline and patience and everything else. So let me just share my chart. No questions involving that analysis, but you can see here, this is Bitcoin. You can see back here, this was the Fed rate decision here on Wednesday. That's been pretty much in free fall ever since. We go to gold. Again, let's just pop it up to the 15 minutes so that we can see it. And here we go. Right here. Again, that's the Fed rate decision on Wednesday at 12 noon Mountain Time. Gold, obviously people like to get into gold when there is volatility because it's considered more of a safe harbor. So we did come back here thinking we were going to get back to these highs, which, you know, we were in 20 pips of, so it wasn't, it's not an all-time high, but sorry, back to pre-Fed decision time was up here, and we came to within 20, 25 pips of it here. We dropped right off again. But now from here, this is market open. We actually are getting quite a nice little run up here uh, on gold. So when we drop down, let's have a look at the 5 minute and see where we're going here. Yeah, so we got a nice crossover here. 7:30, you wouldn't have got in there because it was market open on gold. There was a lot of volatility around that time. Jim will show you that in the indices. So you could have got caught out quite a lot depending what your entry was and how patient you were there. But on gold, we did have a pretty clear signal that people were flocking to gold, safe haven, and up it goes. So, we do have a lot of, again, when we go to our 4 hour and look where we are on the 4 hour, we've got some good, yeah, we've got, clear line right here is probably what we'll be looking at as to get to as high as that. We won't get to that today. But, we've got some other clear areas in here. We did have an imbalance on this candle, but it did get filled. Again, that's on the 4 hour. And again, we got some lows right down here. We still got a little bit lower that we can go, although we did have tweezer bottoms, double bottoms here, which indicates that is probably the bottom there. And then, we'll be looking at range wise, these areas in here in particular are going to be crucial as to what goes on right in here. Okay, drop it down to the 1 hour. See, yeah, we're just getting into this range here. There's our imbalance on the 1 hour. It was filled, so it doesn't give us any help here. We do have some imbalances higher up here that we might be targeting. But we do need, like I say, today's a very volatile day, so it's very hard to predict where this is going as this news comes out, what happens with the government shutdown, what happens with the rest of the news today. There is some more news coming up later at the economic calendar. This is all the one that is here. But we do have some other ones near the end of the trading day. These are medium ones on USD. There's no more red folders in there for the rest of the day. We just got through this one. Consumer confidence came out at the same level as was expected, and that was at 8 a.m. 15 minutes ago. Okay. So just very hard to predict here where we're going. It looks like here with the crossover on the 1 hour, we are going up right here. We did cross, I like to put my 50 right in here. Oh, didn't take, hold on the stochastic. And you can see again, we didn't really go through it. We bounced off it. And that's why I like the 50, because if it's not going to do a full movement from oversold to overbought or overbought to oversold, we often get this rejection on the 50. We got one here, we got one here, got one here. These didn't quite make it, so you can tell they're going to go down. So basically, if he doesn't break the 50 or just breaks it and then goes back down again, it's going to continue on trend. Same as here, it's going to continue on trend. So these give us good indication. In this case, that bearish trend is going to continue. Bearish going to continue. Bearish continue. Bearish continue. Now we're looking at bullish being continued up here. So that's something we are in this zone. We'd need to see what happens. We're at 50% in that zone. We need to see where we go from there. Let's drop it down to the 30, see if there's anything else happening. We do have quite a range in here. So you've got these. You've got these areas in here that could be our target. So we're looking up to get up to these areas here. Let's drop it down to the 5. And again, we're hitting this middle line here. So we have to wait and see what's happening in this range. This is, is this going to be support? Is this going to be resistance? Where are we going from here? Down here, we also have a fairly strong area of interest right along here as well. So, we could see a reversal back back to these levels. As you know, gold works on the 5 and the 10. So 620, 615, 610, 605, 600. So, 1, 2, 3, 4, and we're down to that 2600. So, we're approaching, we're between the 2620, 2625. So we have to see which direction this wants to go. Again, looks like we're going up. We're above the primary trend line. Secondary trend line is above. We're nicely up in these lines here. We are right now in overbought, so we need to see what's going on there. If it does come down here, just be aware of this 50% range. If it bounces off here and carries on going up, then this is going to start moving up towards these higher levels here. Okay. In 1 minute, it's not going to show us anything different. All righty, so that is the gold. I'm going to hand it over to Jim if he's ready so that we can have a look at the indices here and how the news has affected the indices, how the art market has affected it, the red folder news, the 8 o'clock. You're welcome, Tony. I'm sorry there's nothing real clear because we're right in this zone on gold. But, it is I think today is a be careful day. If you do enter these trades, just be careful of your stop loss. Trail your stop loss as soon as you break even. It'd be my goal because things could change throughout the day depending on what news comes out on those key points that I told you. Always trade safe. Always trade safe. Patience pays. Exactly, Tony. Okay, I'm going to let me just check the chat here to see. Okay, nothing there. I'm going to hand it over to Jim. Jim, as you know, is my mentor. He's somebody I look up to in trading. I value his opinion greatly. I'm always in awe of what he sees and how many pips he takes and what he's done with his life in terms of retiring from his full-time job as a COO of an international company based in Europe. And he was the head honcho over here in the USA for many years, working his butt off, working all hours. And this skill set that he's now acquired has set him completely free to live what him and his wife call a yes life. And that's something which should all aspire to. And so it's my great pleasure, as usual, to hand it over to Jim to give us his wonderful advice. Take it away, Jim.
Thanks, John. Appreciate you. All right. Are we all getting my sniper screen here?
Yep, got it.
Thanks. So like John was talking about, there's been a lot of news lately in the market, and I'm going to talk a little bit on that as well before I look at these charts. Today is a day where I'm going to really be patient and really cherry pick my entries because this market is going up right now, which is kind of against what I've been hearing. Had my ear to the ground with different so-called experts on what this market may do today. And there's a lot of fear, as John pointed out, which would indicate a potential, down move in the market. But if we're looking at indices on US30 and NAS 100, we can see they're going up. And sometimes, you hear something, or you have a preconceived idea in your mind about where the charts might go, and they don't do what you think it, right? So that's an indication, that you got to always, look at the indicator and do what the indicator is telling you. Now, I am saying I'm going to be very careful, and you should as well. But just because you may have heard something or you feel something and you have some sentimental analysis about what the market may do, you're not always right, and whoever you heard something from isn't always right. And sometimes you just got to look at the chart and do what it's telling you, right? You've heard me talk about how indices like to, aim for targeting previous session highs and lows and things like that. But just because you have that in your mind doesn't mean you should just marry the idea that the trade is going, in that direction. So just, keep that in mind. Some of the things that really affect the market, like John talked about in the U.S. market, was the federal funds rate. Let's see if I can just pull it up here real quick. So we had let's see here. So we had the Fed funds rate, right? Came in as expected. Now the market moved quite a bit on this day, even though the rate came in as was expected. And these expected rates come out, weeks and weeks in advance. So when these rates come out, the market does what we call pricing it in, right? And so the market prices in, meaning the market will move up or down, not instantly, but gradually, in a direction based on what the expectation is. Okay. And so when the expectation is met, the market typically is already moved in the direction that the expectation was. Now, when the expectation is not met, up or down, then the market can be very volatile. Well, the expectation was met here and the market was still very, very volatile. And a lot of that has to do with the FOMC statement and the press conference that happens, after they release the rate. And for the U.S., the federal funds rate, there's the committee, and there's quite a few members in the committee, and they all vote and they all project what they feel the future of the U.S. economy is going to be and what they're going to do with rates in the future. And what happened was there was expected to be 4 to 6 rate cuts in 2025, and when they released this information, it turns out that now they're only projecting 2 rate cuts in the 2025. So it wasn't the rate itself necessarily that moved the market down so much on Wednesday, but it was the statement, okay, and the economic projections showing that in 2025 they're only planning on lowering rates twice now. And so that sent a lot of fear into the market, which is what sent it down. But we don't have to necessarily know all that. It's nice to have a little bit of the fundamental understanding of how the market moves and why the market moves. But as a scalper, you're not necessarily really needing to understand fundamentals, right? Because we're looking for very small moves in the market in terms of how much the market moves, right? I mean, the market can move hundreds or even thousands of pips, as we saw on Wednesday. And we only need 20, 30, 40, 50, right? So it's nice to know, but it's not necessary, right? And so these types of news events can be, very volatile. They can hurt your account. They can be very profitable depending on, how patient you are and if you're taking the right moves and you're being patient. But around the globe, these rates are called you know, something different. So in Great Britain, it's the official bank rate. Okay. And then, you know, over here in Australia, it's the cash rate. And so you'll see similar names when it comes to, you know, the European Central Bank. It'll say ECB over here. That's the cash rate for, you know, the euro. And then you'll see similar things for like the JPY and the New Zealand dollar and so forth. So it's always good to just kind of keep an eye on that, see if the projection is coming out as expected, or see if it's coming out more or less. Now, how this affects the markets is, you know, primarily it actually affects the currency in which that news is coming out in the country. So if these rates are high, then the value of that currency typically is high. Okay, so it's easy to remember something, a saying like rates up, value up, right? So rates up in the US, value up of the US dollar. Rates down, value down. Okay, so and then so if you're trading currency pairs, you can expect that if there is a difference here, and let's say that this came out at 4.5 instead of 4.35, you'd expect that all the AUD pairs would actually go up. So if AUD is the first currency in the pair, then the value is going to go up in that pair. And if AUD is the second currency in that pair, then the value is going to go down. Okay, and then same thing here. If this came in lower at 4.0 or something, then you'd kind of get the opposite reaction. So just some extra fundamental education for you guys. Let me look at my notes here. Okay. All right, so that's it for the fundamentals. Let's look at some charts here. NAS 100 was much more well behaved this morning than US 30. We'll just take a look at US 30 so I can just show you what I mean. So within each one of these 1 minute candles, if you were watching the chart, there was just a ton of just wicks up and down during each candle. When you see these candles finish, you're like, oh, you know, that doesn't look so bad. You know, but in this 1 minute candle, you know, I mean, you could have thought, oh, this is going down because it left a huge wick up here and then it shoots up and you're like, I think this is going up, and then it shoots down. And it's just very, very hard to trade in a situation like that. I was looking for an entry here and I just completely stayed out. But on NAS, we had a little bit, you know, we still had a lot of volatility, and I still probably wouldn't have taken a trade because of all the uncertainty in the market right now. But we did have a little bit smoother moving NAS. Okay, so we had market open here around at 1430. Really didn't move that much as like US 30 did. And then we had the big spike up, and then we had a big drop all the way down to our primary trend line, which, as we talk about, can be a place where price bounces from. Okay. And then we had a continuation. So now, if we're interested in looking at this, the entry that I like to look for primarily is, first of all, determining, am I looking for buys or sells? Well, if we're above the primary trend line, we're only looking for buys. And then we have the secondary trend lines where blue is above red. So we're, you know, we're in buy mode there, right? And then now we're looking for a pullback, right? So here we had a pullback here, but, you know, according to the rules that I like to follow, this pullback is not deep enough. We only dipped down a little bit right here, just over this overbought line, and then back up. Okay, but over here we get a full pullback all the way to the oversold, and then we get a break up here. All right, and we got to pull back through the EMAs, and then in one single candle, we broke above both EMAs. This is like the most textbook entry. Okay, when you get one candle that does everything in one single candle, when it breaks through both EMAs, we have a nice wick down here at the bottom. Okay, and then we have a cross up here from the oversold line on the stochastic. But if we draw this up, this requires a 50 pip stop loss. Okay, so if you're taking a trade like this, you understand, first of all, the volatility of the market, right? Look at the size of these candles that are painting, right? We're getting 20, 30, 40 pip candles on NAS, which is huge for NAS, okay? So if you're using a regular lot size that you're used to using on NAS, understand that if you're going to have a stop this big, you need to cut your risk. You need to cut it at least in half, and maybe even more because of the volatility and the uncertainty in the market. But as you can see, this easily went to a 1 to 2 if you would have just had a preset take profit. And if you wanted to target the previous session high here, you could have targeted that. And if you were trailing your stop loss versus having a set take profit, then you could have, let it come up here, seen this range, but it did hold this blue EMA the whole way. So you could have just held here below this wick, okay? And you would have had, a good 30 pips locked in here, and then just saw if it was going to break out of here. And then once it started to break out, you could start to trail, and you'd still be in this thing. Hundreds of pips in profit, right? So far, we got 235 pips in running, okay? So right now, we're really not, after that move here, we're not really seeing another opportunity to enter. We've had very, very minor pullbacks here. And what happens is sometimes we get impatient and we have FOMO, and we don't want to miss what's happening, and we feel like we can just get in. And a couple things can happen. One thing that can happen is you can get in, say here, and these moves are so big and so volatile. I mean, this can immediately come down 100 pips and take you out. And obviously, that's not good for your account. But what else can happen is you can grab all these pips, which is almost just as bad, because it gives you this false sense of confidence that you were smart and you were smarter than the charts and you didn't need to wait for a pullback, and that, this trade is successful for you this time. But what ends up happening is because you took this and you think you know better than the indicator and you know better than the markets, you're going to go do that again the next time, and it's going to wreck you. And then you're going to think, oh, that was just unlucky. And then you're going to go do it again, and it's going to wreck you. Okay. So you got to be patient. Okay. You got to follow a set of rules, whatever those rules are. I have my set of rules that I've shared with you here. And getting in the middle of a big run is not in any of my rules and should not be in any of your rules. Okay. You got to wait for those pullbacks. And see, we're getting a pullback now. So if you would have just jumped in at the top of here because you just thought, oh, this is already down, 40 pips. And depending on what kind of stop you were using, you might be out of that already if you had jumped in at the top there. Okay. So I want to talk a little bit also about consolidation. And we talk about that a few times in here, but it's always good to talk about it. So, we have some consolidation here, and there's a couple ways to recognize consolidation. So you see here how these Bollinger Bands, they're just flat. They're just flat, okay? There's no, see here, we start to get an expansion. We get expansion. This means we're coming out of consolidation, okay? But when you see them horizontal and very narrow, then that is a good indication that you're in consolidation. And sometimes when you're trading, you don't recognize this. Either you just didn't analyze the market and the movement well enough, or sometimes you're at the very beginning of it, right? So, we had some movement here, and then you're looking for the next move up. So you're looking for this breakdown here, and then you're looking for the break up. So you're entering somewhere here, and this does move up a little bit, but maybe you're holding it for it to break out higher, and now it's just not doing anything. You're in around this level, and it's up, 10, 15 pips, and you have a 30 or 40 or 50 pip target, and it's just kind of not doing anything, right? And you're wondering, why, and then you can start to recognize, okay, we're in consolidation. Okay, and a lot of times what happens in consolidation, when you're waiting for these types of moves and these types of entries, is you'll get the entry, very late into the consolidated move. And so, for instance, you might enter at the top of this candle, and then you're immediately going down, right? And because you're just stuck in here. And so it's very important that you zoom out. Okay, I've had a lot of students, talk to me about their trades and why, the trades aren't panning out for them. And they send me a screenshot like this, and when you zoom in like this on this section, oh, okay, maybe the bands are still flat here, but these look like they're moving a lot, right? I'm like, okay, but take a minute to zoom out. Take a minute and zoom out. This is a trend, right? This is a trend. Look at this compared to this, right? Look at this here compared to this, right? So, zoom out. Are you getting in when the market's flat? Okay, you got to be patient. You want to stay out of here. Once the market starts moving, it's okay. You're not missing out. Now you have an opportunity to wait for that pullback. Lots of pullbacks, lots of entries along here, I'm sure, without going in and analyzing each one of these pullbacks that go overbought here on the stochastic. You can just tell there's going to be a lot of potential entries here. Okay, here, maybe you didn't get stopped out, but you really didn't run in any direction very well here. Okay, so just keep an eye on consolidation, learn how to recognize it. The Bollinger Bands are really going to help you see that, and zoom out on your chart a little bit and find out what movement really looks like compared to where you're trying to trade in. Okay. See here. Okay. Also, I've been talking to some people who are trying to learn this and perfect it and understand the movement, and trading on different time frames. I like to trade on the one, and on pretty much all the forex pairs and the indices. I like to trade on one. I really don't trade gold, and that's for no other reason than I just really don't know gold, and I haven't taken the time or felt the need to have the time to add gold to my repertoire of pairs that I trade. There's a lot of successful people. I know John and Tony love trading gold. But for myself, I always find enough opportunities in the markets on the pairs that I like to trade, which, during New York is NAS 100 and US30. And sometimes in the evenings, I'll trade some Forex pairs if there's news related to those, because I like a little bit more movement in those pairs. But they can be traded in the evening, even, without news. And so I have, when you're looking at Forex pairs in Asia session, I had somebody looking at those. Let's go to them here. I had somebody looking at those, during Asia session, but on the 5-minute chart. One of the pairs I do like to trade during Asia is GBP JPY. Okay, but when there's such low volume as there is during Asia session, you're going to. So this is, this is the time we're talking about here. Okay, when you're looking at the 5, there's barely enough movement as there is. You might have a average range during the Asia session of 15 to 30 pips. Okay, and so when you're looking at the 5, it takes a long time for a 5-minute candle to print. Obviously, it takes 5 minutes, but if you're waiting for 10 candles for your move to set up, then you waited an hour for the move to set up. which is okay. But if you're trading during a high volume time when it comes to forex pairs, which is London session over to crossover into the overlap of the New York session, then you're going to have a lot of options between the different currency pairs that move during London and New York. But in Asia, you're really probably looking at Asia related pairs, so anything related to the JPY, the Australian dollar, New Zealand dollar. And if you're looking at a 5-minute chart, you're not going to get a lot of moves that satisfy all the rules and that are going to deliver the amount of pips you need in order to, be satisfied and actually take winners. So if you're trading during a lower volume time, but the volume is still decent, right? You want to be on a 1-minute chart. So if we just take a look at this area here, okay, and we look at this on a 5-minute chart, so we have this whole move down here at the beginning of my little box here. And, depending on the entry style, you might have some entries here, right? But if we're talking about the type of entries that I like to look for, we get one down here at the very end. We get it overbought and then oversold. And we do have a little bit of a little move here, okay? But if we go to the 1 minute, and then we'll just go find this area on the chart again on the 1 minute. So we'll go here on the 1. We're still looking at sells. We're below the primary trend line. But as you can see, from here to here, how many times did we get an overbought, right? At least a dozen times. So there's a lot more opportunity in the market. And this is, what's the range here? So from the time we got below the primary trend line to the bottom, I mean, there is 45 pips here. And so there is a lot of more opportunities for you to get into the market here when it's not moving, hundreds of pips. And so, just keep that in mind. If keep in mind, what time frame you're trading and what kind of volume you're trading in, what session you're trading in. I recommend, like I said, the Asia pairs during Asian session. I recommend the 1 minute chart for that. But if the 5-minute chart is fine. Confirmations are actually, stronger. They indicate a stronger indication that your move is going to go the way you do on a 5-minute chart when there's good volume. But if you're available, depending on where you are in the world, to trade London, forex pairs are great, and you can use a 1 or a 5 on that. And you know what? I remember somebody on last session we had asking about trading on the higher time frames using this indicator. So yes, you can trade on any time frame using this indicator. The only thing I recommend, and let's just go here to a different pair. The only thing I recommend is when you start trading on other time frames, what you want to see with indices, indices can move very good and very well, regardless of the current overall trend. So if just like today, right? The trend on NAS has been down for, obviously since here, all the way since here, we've been trending down on NAS on the 15-minute chart, or this is US30. But it's going to be similar on NAS. But we had, some opportunities to go up above the primary trend line with US30. Okay, because once the indices, decide to cross the primary trend line on the 1 minute, Oftentimes, whatever the overall trend is for the day or the week, isn't really that big of a factor. Okay, but with forex pairs, you're better off trying to follow what the overall trend is. Okay, and so if we are looking at forex pairs, let's say, and you want to trade, say, the 15-minute, okay, then you want to get an overall analysis of what the 15 has been doing. So obviously, if we go back to the beginning of the month, we've been in an uptrend, right? Or if you go to the 1 hour, you can tell that the 1 hour is above the primary trend line almost exclusively since December 10th. Okay. And so we're currently, for the past couple weeks in an uptrend. So if you want to trade on the 15-minute, take a little time and do some longer time frame analysis and look for buys. Now, right now we're above the primary trend line, so you would be looking for buys. But when you start to get below the primary trend line, keep in mind that we are in an overall uptrend for the past couple weeks, and that maybe sells, even though this came down here and could have yielded you some pips. Keep in mind that on a forex pair, your trade is much safer if you're going with the trend. Okay. And so if you go to trade Euro JPY and you notice that the 1 hour trend is down, but you're getting a buy opportunity, it could work out for you, but more times than not, you're going to be more successful if you're in alignment with a higher time frame, say 1 hour, 4 hour. Okay, so all you got to do is flip through the time frames here and flip through whatever pairs you're looking at and confirm that the higher time frame aligns with the current time frame that you're trying to enter on. Okay, because this could just be a pullback on the higher time frame to continue in the right direction that it is on the higher time frame. So just keep that in mind. We'll look at another pair. So right now we're going to go to the 15, and let's say you wanted to trade on the 15. Okay. And let's say we're above the primary trend line and we're looking for a buy, right? So we're going to wait for this pullback here to give us a buy entry. But we go to the 1 hour and we are in an uptrend on the 1 hour for quite a bit. Okay. So that would be confirmed that you are in an uptrend and your 15-minute buy setup that you're waiting for is in alignment with the higher time frame. Okay. So pretty much done here. Let's go take another look at indices, see what we got going on. So we got US30 here, has made a huge move and then had a little pullback. Now we're in consolidation. So what I'd be waiting here for is not necessarily my signature entry that I like to wait for, because we're in range now. These bands are starting to contract. Look how tight they are here. Okay. And so what I'd like to see is a breakout in either direction, and then look for a move after the breakout. Okay. So for me, I'd be waiting to get to break out from here, from the high, and then look for it to then give me a pullback and continue on. Or if this thing wants to reverse and fill in some of this imbalance it's created down here before, then I want to see it break below and then, maybe pull back and continue lower if I'm so inclined to be taking counter trend trades. But right now, obviously, this is a very strong uptrend. So I'm favoring a move to the upside where it breaks out and not taking a breakout, but waiting then for a nice pullback, hopefully one that breaks below here to get another continuation. Okay. But right here, we might just continue this pattern for the next few minutes, or who knows, maybe we're going to break out right now. And on NAS, we're getting a similar situation here. Okay. And so like down here, we did have a break below and then a break up. Okay. But we really haven't gone too much. We haven't gone anywhere really from here. So I would be waiting for the same type of thing here, either a confirmation that we want to keep going up okay? Or, maybe we're going to come back down. And then if and when we do come down, either on US30 or NAS, I'm not married to the idea that this is just going to come down and fall forever, okay? What we could get is a pullback, and then these secondary trend lines will, they'll be crossed down during this pullback, and then we're waiting for them to cross back up, and then now we're going to ride this back up with a proper entry back to this high, or maybe even beyond. So that's what I'm would be waiting for on these. Any questions on that? All right.
Thank you very much, Jim. Appreciate that. We did have a question from Cinder about whether we set alerts or not. Typically, we don't set alerts when we're scalping, Cinder, because we are watching the charts. Typically, people who are swing or intraday traders are going to be setting alerts when they're looking at certain setups. But if we're looking longer term, Cinder, if we think that, as we've said, if price breaks this level or if price comes back to this level and retests it, then we might set an alert then on TradingView. If it's going to happen, later on in the day when we're not in session. But typically, and Jim can chime in if he has any different things, but typically when we're looking at the charts, we don't need alerts. We're watching the charts, and typically Jim and I trade while we're watching the charts. So occasionally, if I'm on the charts and things are going great, for instance, and I've got to go out or step away, and I'm in profit, then I might put my trailing stop loss in so that I can carry on. If it's going to run up when I'm not looking at it, I'll put a trailing stop loss in so I catch maximum amount of pips rather than just cash out. But alerts as scalpers, not really something that I do because I'm watching the charts when I trade. What about you, Jim?
Similar to you, John, if I'm as a scalper, we're watching the charts, and so there's not really any reason to have an alert if you're sitting there staring. But, if I am not liking what the chart is doing, I don't like the range that it's in, then I might go to my personal trading view and I might, set an alert, at the top and the bottom of a range so that when it does break out, I'll get an alert and then I'll come back to the charts. And then that'll give me an indication that now I can start looking for setups. But the alert itself isn't, for a trade, so to say. It could just be, now is an okay time to go back to look at the charts because it's moved out of an area. Okay. But one thing that I don't do because I don't trade a higher time frame, but as I was talking about here on Forex, is let's say that you were in a trade, right? Let's say that you got in here on the 15-minute, okay? And let's say that you have a 1 to 2 setup, okay? And you're in a buy, right? And then we have and your trading plan tells you that at a 1-to-1, you're going to set an alert to go move your position to break even, right? So you go to your own trading view and draw up the same trade and set an alert at the 1-to-1 area on your trading view chart so that when price gets to a 1-to-1, your trading view sends you an alert. And no matter where you are, if you're at work or whatever, because these are 1, 2, 3, 4, 5, 6, 7, 8, about 7 or 8 candles. This is a couple hours. You're not going to sit here and watch a 15-minute trade. Okay, 15-minute trades are or higher. You're going to set, and then you're going to go about your day. You might look for 1 or 2 other setups. You might have 1 or 2 15-minute or higher time frame trades set, and those are not scalps, right? So you're not watching those. So you might set an alert to let you know when price does something within your trade to give you another action, right? And so if you have a 1 to 2 and you have a rule that this goes to a 1 to 1, you're going to go to break even. It'll send you an alert. If you have the TradingView app, it'll alert you there, and then you can also have it send you an email. And then you come here, you go back to the chart, you open up your MetaTrader, your trading platform on your phone, and you go, okay, we've gotten to a 1 to 1. Whatever your rule is or strategies, maybe I'm taking partials, or maybe I'm moving my stop now to break even now that it's gone to a 1 to 1. And then you go do that, and that's how the alert helps you. And then you're continuing to let the trade ride to a 1 to 2. So like if in this case with this trade, if you would have done that, you would have moved your stop to break even, and then you would have been out at break even, because obviously we see here price pull back to where our entry was. So that's how you can use alerts on your personal trading view. We cannot do alerts here within the GFU. That's why it's always good to have your own trading view account. There are some limitations with the free version, but I believe you can set at least a couple alerts on the free version. But that's some info on alerts.
Great. Thank you very much, Jim. Appreciate that. We had one more question from Maria. Do you use the 5 50-minute charts just to watch what movement is and then just trade on the 1 minute? With our trading, Maria, you can see what we do is we go to our higher time frames, 4 hour and 1 hour, and start marking up our areas of interest, supply and demand, support and resistance, stuff like that on the higher time frames. Then we start drilling down to the lower time frames, typically maybe the 30-minute, maybe down to the 15. But that is our pre-trading ritual. Once we've got that set up, and we got a good idea what the trend is, as Jim just explained, the higher time frames will give you a clear indication of those areas, those zones that we're interested in, and the overall trend. Once we drill down and start trading, we're scalpers, so we're going to be trading on the 1 minute. We will sometimes use the 5 minute as extra confirmation. And in some cases, I use the 3 minute as extra confirmation. But as scalpers, we're really taking our trades on the 1 minute. And Jim did a good job a few minutes ago just explaining why, by showing you the difference between the 1 minute trade and the 5 minute trade, how many more opportunities you can see on the 1 minute. So as scalpers, we're really trading the 1 minute chart. So hope that helps. Anybody else have any questions? I'll just wrap up. There's lots of great messages in this training. We start off looking at fundamentals and everything, but as scalpers, we're not as concerned about those. The main concern we're going to be is when we know there's times of volatility, like on the economic calendar, on decisions, on things expiring, on things happening in the government. It just means we're going to be a little bit more careful. But we trade what we see as scalpers. So when we go down to that 1 minute, we're trading what we see on the 1 minute chart. Every candle is telling us a story. Every EMA is telling us a story. Every movement overbought and oversold is telling us a story. And that's a story we listen to. And like you saw this morning, there was a lot of sentiment in the market thinking, the market was going to be bearish. But we saw, especially on NAS and US30, it was actually very bullish. And so that kind of fear can keep you out the markets and keep you away from the pips that you can enjoy. So trade what you see. The other thing is, concentrate on becoming proficient on a small number of instruments. Jim pretty much is the Dow and NAS. I'm pretty much NAS and gold. I do trade pairs every now and again. But become proficient, especially when you're starting. Just become proficient on one or two, because that's enough. as Jim said, what are your goals? You want to get 20 pips a day, 30 pips a day, 50 pips a day. When you're good at this, you can do that in one trade. Jim does that every day, all day, very often on one trade. If his target is 50 pips, you can do that in one trade on US30. You can do that on one trade on gold. You can do that on one trade on NAS. The other day, Jim posted it in the chat. 1,400 pips in that big move down. So lots and lots of opportunity. Don't be jumping from strategy to strategy. Concentrate on GFU, get that perfected, and you'll make money. And concentrate on one or two instruments. When you're scalping, again, going back to Maria, do your markups on the higher time frames. I like the 4 hour and the 1 hour, and then drill down to the 30, maybe the 15, but I'm trading on the 1 minute. Trade what you see as a scalper. When you get into the higher time frame tradings, swing trading, intraday, etc., then you're going to need to change that strategy. All right. I think that's all from everybody. I am going to stop that recording because some of those